Thank you for joining Direct Women for today's webinar. We will get started momentarily. Thank you for joining Direct Women for today's webinar, Director's Perspectives, Private Company Board Service. My name is Yesenia Chavarria, and I'll be your technical moderator behind the scenes. I am the Administrative and Events Specialist here at Direct Women, and I'm excited to be hosting this session. Before we get started, I'd like to run through a few housekeeping notes. You should all be able to see the screen right now and hear my voice. Attendees, however, are muted, so although all of you can hear me, we cannot hear you. That said, you can still ask questions, and we encourage you to do so. Please submit your questions using the Q&A feature in the Zoom console, not the raise hand or chat features. Feel free to submit questions at any time throughout the webinar. Today's webinar will be approximately 1 hour, with 45 minutes of content, followed by a few minutes for Q&A. Links to our speakers' biographies will be provided in the chat once the program has begun. Lastly, there will be a short survey at the end of the webinar that we hope you will complete. It is only 4 questions and should take no more than 2 to 3 minutes tops. With that, I will turn it over to our moderator of today's program, Teresa Sebastian. Teresa?
Thank you, and welcome to everyone to the Direct Women event. We are glad you were able to join us today. Direct Women's mission is to increase the representation of women lawyers on corporate boards. So today's program, we will be talking about directors' perspectives in private company board service. But let's get started. But before we get into the substance, what I'd like to do is to have each of our panelists share their board story with you. So Megan Belcher, if you could let us know a little bit about your board service.
Great, thank you, and welcome everyone. My name is Megan Belcher. I'm the Chief Legal Officer and Corporate Secretary for Kohler, which is a kitchen and bath and hospitality company. I have served on 2 large privately held family-controlled boards. For 3 years, I served on the board of Schooler, which is a $10 billion global agribusiness company that is both privately held, family-controlled, employee-owned. And I currently serve on the board of Yakima Chief Hops, which is a grower family-owned company based in Yakima, Washington, that is one of the US's largest hops growers and distributors, and have the honor of being one of their independent board directors.
Thank you so much. Mary Dent, can you please tell us about your history and board service?
Sure. Hi, everybody. It's nice to meet you. I have been doing significant amounts of board work for about the last 5 years when I left the last of my, let's call it super heavy duty executive roles. I'm actually a general counsel again, but it's of a small advisory firm. And so that's pretty easy as a day job and leaves lots of time for other activities, including board service. I've served on a total of 7 boards, 1 public and 6 private. Plus quite a few nonprofits. And the private companies have had a range of different kinds of ownership. I currently serve on 1 board, Woodruff Sawyer, which is employee owned. I serve on 1 board, Banking Circle, which is private equity backed. I've served on 3 venture capital backed boards and 1 subsidiary board of the public company board.
Great, thank you so much, Mary. And Loria Yeadon, please tell us about your board history.
Good morning, good afternoon, everyone. Thank you, Teresa, and to my fellow panelists, Loria Yeadon. And I'm pleased to be here this morning. Just for a little bit of context, my background is electrical engineering and law. I'm a patent attorney by trade and training. And this set me up nicely for my board journey. But before I leapt into private and public board service, I served on large nonprofit boards, including Legal Momentum, Girl Scouts of the USA, and a few others. And that actually prepared me for my first public board at TiVo, which is a very rich organization with a lot of patents and intellectual property. That company was acquired by Xperi. And currently, I serve on the board of the Laird Norton Company as its governance chair. And Laird Norton is a family-owned company. And I also currently serve as the president and CEO of the YMCA of Greater Seattle.
Great. Well, thank you to our three panelists, and let's get started. So as much of our audience may be lawyers and experienced board members, but let's just go over some things that we know about private companies. We know that public companies certainly are subject to more regulation than private companies, and privately held businesses don't face the intense scrutiny that publicly traded companies do, such as disclosing their finances and activities in accordance with securities regulations. So that's why some companies prefer to stay private. But a statistic is that the US has an estimated 1.5 to 2 million private companies, which spans the spectrum. As you probably heard from our panelists, they could be family-owned, they can be small businesses, large businesses, employee-owned businesses. So private companies come in many different forms and fashion. In contrast, there are approximately 4,000 to 5,000 public companies listed on major stock exchanges like the New York Stock Exchange and NASDAQ. So as a result, there are many more board opportunities at privately held companies. So with this program, we're going to explore the differences between a public versus a private company and what it means to be a board member at a private company and some of the key considerations for you to think about if you're pursuing a private company board. So first, let's start with Mary. Mary, without that SEC regulator sitting there, where does the scrutiny of a private company's board performance come from? Who are the board members accountable to?
So this is actually one of my favorite things about serving on private company boards, and the reason that I've ended up pretty much exclusively choosing to serve on private company boards, which is, it's the owners of the business and it's the people who run the business. It is the direct conversation that you really want to have, and that in a weird way, boards exist to facilitate. But in a public company setting, it's very hard because you can't actually talk to your shareholders, and they can't understand every reason that management has for doing what it has, what it's doing. In a private company, you can actually have those conversations when they're productive. I would say it is because you have so much discretion, and the best can be wonderful, but the worst can be terrible. It's one reason I would recommend everybody really pay attention to whether you are aligned with the philosophy about the board's role in facilitating that oversight and that conversation with the shareholders, with the other board members, and in particular with the CEO. Oversight on private boards, again, you mentioned, Teresa, how variable private boards are, but it tends to be much more by investors directly in conversation with management and through the board. And in my experience, much more financially focused, both projected growth and earnings as well as past financial performance. There is a huge diversity based on the scale and maturity and personality of a company. I'm comfortable with the level of governance on all my boards, but for example, one has no committees at all. And another has what would look like a public company committee structure and sort of cadence for meetings and all of that. The things that I would look for separate from specific governance structures, they can vary in how they show up, but in my view, they have to be present. One is an appropriate amount of independent thinking. The second is effective management reporting. And the third is the ability to deal productively with conflicts or tensions. And if you have those three things, I don't care whether you've got no committees or lots of committees and formal structures or not. If you don't have those things, even when you have all the formality of a public board, I think you're going to have trouble.
Yep, I think that's all interesting. Do you think, though, that because you don't have that scrutiny that a public company would have, that some of your stakeholders, such as your creditors, tend to exert some of that scrutiny that's otherwise missing.
Yes, and I think it's healthy because I think the myth that shareholders are a homogeneous group is actually false. And I think in a private company, you can have more honest conversations about the interests of different stakeholders, where they are aligned, where they're not aligned, and how to manage that, over time, you really only want stakeholders in the business who are aligned with what the business is trying to accomplish. And, if you have a hedge fund investor in a company that's about long-term growth, that's not a good relationship. And so you figure out how to navigate through that. So I do believe that you're absolutely right, Teresa. Everybody who depends on the company's success for something that matters a lot to them can and should in a private company have a voice. And managing those voices is a really important role of the CEO and the board.
Right. So Megan, Mary touched on this a little bit, but if I join a private company board, what difference should I expect in the governance structure? She mentioned some don't have, committees. What other things might be different in terms of governance that you've experienced?
Yeah, I think part of the magic of private company boards is there's no one shortstop answer to that question, right? So the beauty of being a private company is that you are dramatically less regulated and you do have significantly more freedom around some key structures like governance, how you're holding capital, lack of visibility to your financials or your other strategic plans. And that really puzzle pieces in when you think about governance, that each private company board, in my experience, whether I've been serving as a board member or been serving as a corporate secretary or someone supporting the board or a committee in a different way, is truly bespoke. It is truly often a combination of what the ownership structure wants to see. So that could come in a range of varieties, whether that's a combination CEO chairman who has a very specific view, if it is family ownership in combination with a truly outside CEO, if it is much more driven by a very powerful employee shareholder that has a key governance role on the board. So the general answer I would give is it really varies depending on the entity that you're talking about and what the foundational qualities are of how that company is made up and governed. Separately, I would say culture is a pretty significant driver of how those organizations think about setting up their governance structures. And as you think about interviewing or getting curious about joining those types of boards, I would really encourage you, as part of your due diligence, to dig deeply and understand what the governance structures are, why they are that way, what are chair and CEO drivers, and what are cultural drivers. And as part of that due diligence, you can really understand a lot about the company and a lot about why that private company is governing itself in that way, whether it be out of a strategic reason, out of an emotional reason, or out of an ownership structure reason. Separately, what I might offer in the private company context versus the public company context as you think about governance, and particularly for those on the call that are joining wearing, at least in part, their lawyer hat, there are many instances in the private company context where in the boardroom you will have much more robust debate about issues because there is not a clear rule that governs you. In the public company setting, you might have a very clear regulatory rule that will drive you to less choice around a decision, where in the private company setting, the board oftentimes will have an opportunity or in potentially a detrimental way, the ability to have more debate about what is the right answer to a problem when there's not a clear rule or governance structure that comes from the outside in.
You know, so a couple of the private boards that whether either I've interviewed with or I've joined or have worked with in some form or fashion always say we want to be IPO ready. We want to have the structure, you know, so we're IPO ready. How important is that when I'm thinking about a board to see if they have kind of the public company best practices? And basically, what does that mean?
I think as you're examining, excuse me, board opportunities, you should know what IPO ready means, and you should know what the downstream effects of that are. I think I am seeing a very interesting kind of ongoing conversation, particularly for more longer standing, larger private companies, that they have no desire to be public and they have no desire to be IPO ready. And that could be for many different reasons. And I think equally as important for you to know and understand and read the room when you are going in to interview for those board seats, that you should know the answer that that board will want to hear if they ask you, do you think we should go public? So I think as much as you should know what being IPO ready means and what the effects of that is on the company, you should also know and have an opinion and a perspective about if you think the board should go public. And you should also know what the leadership and the board's opinion is about that same question.
Great, thank you. So Loria, you know, because the SEC requires public companies to disclose certain information, as a private company board member, how do you gauge management's transparency and assure that you are exercising your fiduciary duty, getting the information you need, making sure that you can, you know, take advantage of you know, you know, that you as a board member have the information you need to exercise your business judgment, you know, and take advantage of the business judgment rule if you're ever challenged in terms of did you exercise fiduciary duty. So talk to me about the distinction there and how you get comfortable as a private company board member.
Yeah, thank you for that question. It's so important. You know, the SEC rules and their reach and their influence extend far beyond public boards. I mean, people look at it as a standard because those standards set expectations. They set standards and they help establish a culture. And in my experience, and me coming from a public board, with the private board that I'm now serving on, I bring kind of that expectation as a high standard. And there are other members on the private board that I'm serving on who also serve on public boards. So you have that cross fertilization because everybody's trying to set a high standard. They want the faith and the trust as fiduciaries of the shareholders. And so everyone's trying to find, you know, how do we present ourselves and govern in a way where we are trusted. There's high trust and high faith in how we lead at the board level. But there are also corporate and board policies that are set by private boards, and they can be guided by and borrowed from the SEC rules. It can also come based on tried and true practices that work for the shareholders or unit holders, some of whom are family members. And so you look at what has worked and what preserves that trust and that faith of the board by the shareholders, by partners. And that's you tweak around that through your governance process. You have an intense conflicts of interest policy, non-disclosure agreements. All of those things help set the expectations, set the standards, establish the culture around how the board governs.
Yeah, and so you know, there's one thing that I do, Loria, sometimes I look at how can I get out in the field, and, do field trips to, whether it's the company facilities, talk to management outside of the boardroom. Are those things that you have done, or are there any additional things that a board member at a private company can do to make sure they have a good level of transparency to exercise their fiduciary obligations?
I avail myself to the leadership team who just need a sounding board, perhaps. I'm always careful to make sure that my nose is in and my fingers are out.
Mm-hmm.
But to be that sounding board, you learn a lot. And you learn ways that the board can be more helpful to the leadership team so that together we can maximize shareholder and unit holder value. So yes, getting out, participating in the big corporate events, being present, I think is really, really important. The Laird Norton Company has this amazing thing that they do annually, which is the family gathering. So all of the unit holders from around the world will come to a gathering, and I go every year. That gives me the opportunity to understand what those unit holders are expecting, gives me an opportunity to build trust with them as their fiduciary of the company. So I think availing yourself to be present that way is really important. Just keeping in mind, nose in, fingers out.
Mm-hmm. Right. We always need to remember that as board members. So Megan, kind of taking this a step further and putting a focus on culture, because Gloria kind of touched on it, and trying to understand, what the company is about. When you focus on culture in the boardroom, and that's, been out there in terms of best practice, especially, recently, and that it sets a tone for the corporate culture, at least the board does. So thinking about the differences in culture between private and public companies, how does that impact the boardroom, if at all? And is it different between private and public companies? And how do stakeholders fit into this in terms of, the culture in the boardroom and the board setting that tone at the top? I think I just said a lot there, but I hope you kind of get where I'm going.
I do. I'm going to offer my very practical and what may sometimes be a little provocative perspective about boards. I think agnostic of private or public, the company that you are joining the board of is on a journey and has a job to do. Where that board is on their journey and what the job is going to vary company by company. And the practical effect of that is that the human beings on that board and those two other pieces of where they are on their journey and what kind of the goals for the board are will drive the culture on the board, as will your ownership structure, the leadership, and how your chair thinks about leading and driving the culture in the boardroom, because the chair has significant impact on that. And I think people often forget and lose the very important piece of the human element. Boards at the end of the day are a group of high functioning, high talent individuals who, like many of us, are essentially rescue dogs, right? They bring their traumas to the table. They bring their experiences to the table. They bring their fears to the table. And the key of being a really effective board member as part of a culture, and the key of influencing the culture on a board, is knowing what all those fears and backgrounds and expertise that those individuals bring to the table, how they like to operate, and how you can influence. Because the key is, I don't think anyone puts in the effort and the work to join a board to then have no influence on the culture on the board. So I do not think that there is any rule of thumb, private versus public, that drives a culture on a board. I think each one is truly a very unique setting with very unique people, and how those various structures layer up into that board culture can be very, very influential.
So Megan, if you are interviewing for a private company board, and let's say, the founder owns the majority or close to all of the shares of the company, and so they're to some extent handpicking their board. How do you vet out that board culture? Because I know when I'm interviewing for a board, whether it's private or public, I want to kind of get my finger on the pulse of the culture that's, in that boardroom. So when you have maybe one shareholder, that the board is basically beholden to, how do you gauge the influence that one individual has versus, let's say, it's a family-owned company and maybe there are 10 family members? How do you gauge the culture that you're going to be walking into in that boardroom?
I think there's a couple of key strategies that I would recommend as individuals continue on their board journey and are exploring on a case by case basis if they're the right fit, because it's as much about them assessing you as a candidate as it is about you assessing them as becoming a key part of their leadership, because that is what board members are, is a part of strategic leadership. One, you should be showing up in those conversations as your authentic self, right? That does not mean kind of letting your hair down and, giving everybody a look behind the curtain about you as an individual in a completely fulsome way, but it is being authentic about who you are, how you lead, how you will show up and interact as a board member, and most importantly, what your core values are. Because if your core values are not consistent with how that board is operating or how it aspires to operate, that is an institutional failure for you waiting to happen. So one, showing up as your authentic self and being very transparent about what is critical for you as a board member. Separately, I think having as many conversations that you can with your fellow board members, your board chair, from a place of curiosity and inquiry, and really inviting conversations around the hard things, because that is where board culture can either help you thrive as an organization or can help you fail. So how do you do with the hard complexities? What would happen if you were in a situation where you ultimately had to decide if you were going to self-report to the DOJ? What would this board do, and how would it undertake a process if we had to make a change from a CEO leadership perspective? Help me understand where we have opportunities around decision making as a board. Really get very curious, as opposed to coming from a place of advocacy, approach from a place of inquiry, and get deeply, deeply curious about very specific behaviors and handling of the most intense situations that the board will have to approach. That will really help you see into the future and look around corners about not only what will be friction points for you, but places where you can thrive as a board member. And then the spaces where you can bring your superpowers to bear to really enable the company to meet its top and bottom line growth strategies and its bigger picture aspirations over time.
Great, thank you. So yes, Gloria.
Yeah, I was just going to double down on what Megan said. She hit it on the head. I would just add just a few more things on the periphery. If you have the opportunity to talk to former board members, do it. And as you're asking those tough questions, as Megan has recommended, you have to really listen with the curiosity that she spoke of. And you really have to hear what's being said. Sometimes, especially those of us who are trying to land our first board, or we know publicly the reputation and we're kind of going in with that in mind when we're doing the interviewing. You really have to have a clean slate and listen beneath the words and don't ignore what you're hearing. If you have a third sense of something that's telling you that something is up, keep digging, keep probing. I think that's how you really understand the culture as best as you can before you actually join a board. But I think the inquiry has to continue even as you're coming in. And that's, once you're in it, then that's your opportunity to do that shaping. But I would just be very honest about what you're hearing, because sometimes I think those flags go up and we often don't listen.
I think that's great advice. And I would also, and I did this, and I think to great impact both for me and the recruiting board. I got through all the interviews, had all my conversations, and I was very transparent to them to say, I seem like a strange fit for you. And here is why. Here is why it seems like I am an unusual fit for the role that you are recruiting for. How do you explain that? And I will tell you, they had a phenomenal set of answers for that really made sense about how they were trying to think about disrupting themselves and where they had very clearly identified flat spots about themselves as a board and a management team in the past, and where they needed to round out and get better, and how I fit into those puzzle pieces for them. And ultimately, that was probably the most powerful conversation that I had as part of my board interviewing process.
I think this is all good advice here. But Gloria, while I have you up here, let's get into a few, kind of administrative things that are differences that may exist between public and private company boards. So when you think about the time commitment, on the public side, there are all these filings, that the board is accountable to oversee. You don't have that on the private company side. So generally speaking, and I know we're working with some real generalizations here, is there a difference between the time commitment? What's been your observation and experience?
Yeah, so I'm going to share a little bit on two fronts. First, the data. The data tells us that there's a huge swing in the time commitment between public and private boards, and it's significant. Public boards generally 200 to 225 hours per year. Private boards 80 to 100 hours per year. That's generally. I can tell you, based on my experience, and this is part two, that's the data, here's the personal experience. It depends on what the company is going through that really dictates the hours. Once you're on the board, as a fiduciary, as a board member, you have to rise to what is needed to properly govern. So when I was on the TiVo board, for example, shortly after I joined, and I was part of those making this recommendation, the company should be acquired. And so that was an intense time as a public company going through an acquisition. So it took lots of meetings beyond the standard, recurring meetings that are on the calendar. So it took more time for that public company. But also, if you're going through a pandemic, much more time. I'm sure we all experienced that just recently. Sometimes it can depend upon also what's your role. Chairing the governance committee, I put in a lot more time than that standard 80 to 100 hours per year. But also, when I was newer to the Laird Norton Company, I spent a lot more time preparing for meetings. I didn't feel grounded enough to participate the way that I felt I needed to. So I did put in a lot more time. And it was more consistent with what you would see someone serving on a public board. I just needed that ramp up. Now I think my hours are a little bit less because I have a much better foundation. So I think all of those things weigh into the hours that are spent. But in general, certainly the hours can be very comparable between public and private. It just depends upon what's going on with the company.
Yes, and that's been my experience as well, Gloria. You know, I was with a public company who went through a significant merger. We had, you know, even a couple of meetings a week sometimes, you know, a lot of reading, and, you know, a lot of oversight over integration and things that were taking place. On the private company side, I was on a board of a company that had significant litigation, financial distress. Sometimes we had a couple of meetings a day, depending upon, you know, who the consultants were that we were working with. So you're right, it just kind of depends. But I think those stats that you gave people are helpful because the regulatory infrastructure does add a little bit of time in there. One more administrative thing that I want to touch on, and that's compensation, Mary. What has been your experience when it comes to differences in compensation, and what could drive those differences between public and private company?
My answer is a little bit like Gloria's. It is a lot about the company, and it's correlated with public versus private, but not evenly or cleanly divided. So I think the biggest determinants are the size and complexity of the organization, and to some extent the compensation philosophy of the company. And that's both sort of the size of compensation as well as the makeup of cash or guaranteed money versus upside equity. And I think there you see big differences between, say, a family-owned company and a private equity-backed company. Those are just philosophically sort of grounded in different places. So even looking at organizations of similar size and complexity, they might end up at very, very different answers. Almost certainly public companies provide more liquidity and typically provide more certainty. I mean, if you can sell your stock, that is just a level of certainty that a private company cannot match, because by definition, private company stock is in some way, shape, or form, as defined by the company, less liquid than public company stock. Another difference is that in my experience, at least, and my guess is this is true, private companies are often shorter duration. I think there's like a cadence to public company service that's, I don't know, 10 years or whatever, that there's a, you know, you join, the company goes on. There's just a lot more change in private companies. Some are stable. One of the companies I'm on the board of has been around for more than 100 years. So it's not that private companies are inherently more variable in shorter term, but certainly my venture-backed companies, you know, those change a lot. And so I was on one for a year and a half and we sold, and that was the end of that board. So I think that while public companies can sell and private companies can be stable, typically I would say you're looking at longer duration, more certainty about the duration of your board service. And if it takes a long time to find a board, then, you know, spending that time for a board that's going to yield a year and a half or 3 years of work is quite different from 10 years of work. And then the last big difference is the data is weaker. With public companies, by definition, when you're looking at your peers, you go to SEC reporting and you can, it's hard to define peers sometimes, but there's no question you've got all you need to know about how they compensate their board directors. On the private company side, it's a little bit more variable, and there are some forms of reporting, particularly say for venture-backed companies, but it's a little bit more sort of intuitive and experiential. In my experience, so acknowledging that there's a wide range, I think venture-backed and private equity-backed companies tend to lean much more heavily on equity than cash. That I've had a private company board that had cash roughly comparable to a public company board and a lot more upside. That is, I think, a company that is very focused on a really big win and wants everybody to be highly incentivized to spend the time and energy to get there. And is not that concerned about money. I mean, obviously they care about money, but I think they really see we're going to have a very small team that's very focused and we're going to get someplace amazing. And we need those people to be with us for the long haul. I've had another, which is much, quite attractive cash, but really very little equity upside. I think they see themselves as a little bit more, we've got this and we need board members who can help run it, but we are not of the size and complexity that means we need a lot from board members. It's a little bit more of a steady hand than creating massive upside. I've had two which would have been 100% equity, that both were venture backed. In both cases, I always want a bit of cash so that I feel good about the time I'm spending and the equity is upside. And so in both cases, I said, well, are you willing to do a bit on the cash side? And both were perfectly happy to do that, even though their philosophy is much more, we want board members to be incentivized mostly by upside. And the outcome, obviously, where equity is involved is highly dependent on the outcome for the company. And, some of those have turned out amazingly and some less so. So I think thinking about what matters to you, thinking about whether the compensation will make you feel good. Loria talked about the range, and I think you need to feel ready in terms of your time commitments, but also fairly treated in terms of whatever compensation you agreed to, that when it's steady state and things are smooth and they don't need a lot from you, that feels good. And when things are really hard and they need a ton from you, like, you got to do it. And you should make sure that when you think about the compensation they're going to give you, that when that happens, you still feel aligned and well treated and ready to do it, because that is your job. And you should be compensated in a way that makes you feel positive about doing your job, whether it's the small job of peaceful times or the big job of difficult times.
Yeah. I'm one that I always like to, know what the data shows out there, to kind of support some of the anecdotal things that you hear. And in a 2020 survey by Aon, it showed that the private company board director compensation was 36% lower than the publicly traded businesses. We all know that you have that regulatory structure. Sometimes the risk of being a board director at a public company appears to be higher than at a private company. And certainly it factors in the time commitment. And also, according to Aon, only 20% of private company firms offer equity to their directors versus in public companies, 96% of those public companies offer some form of equity. So again, that was a 2020 survey. Let me just ask one more question before we turn to the questions that we have received from our audience here. And if you haven't already, please key in your question. We'd like to know what's on your mind and make sure that we address whatever perceptions or questions that you have. Some of us, though, back to our panel, some of us have experience serving on advisory boards or have been asked to be on advisory boards. And I'm just going to throw this out there to whichever panelist, has a thought. How does this differ? How does advisory board work differ from other kinds of private company consideration? What should we be thinking about if we're asked to join an advisory board? And again, how does that compare to private company board service? Anyone that's had that experience on our panel?
Teresa, I will maybe piggyback a bit off of what Mary offered around compensation and tie it conceptually into how to think about advisory boards. As you think about the concept of compensation for your boards, Mary's points are all spot on and very well made. I will also say, as you think about prioritizing compensation, it should not have greater weight than how you feel about your fit on the board, how you can have impact, and the like. If you are offered a board role that is incredibly highly compensated, and you know that it's going to be inconsistent with your values, not a fit for you authentically, I will tell you the payoff is never there. So compensation should always be fair and a priority that you weigh. It should never be the priority in how you make a board decision. And I would say that is very similar to the lens that you should think about advisory boards. There are lots of personal benefits that you can get from serving on an advisory board, But I look at that opportunity much more the way I look at nonprofit opportunities. Do I feel like I can have impact here? Why do I want to have impact? What is the longer term game to me as a board member and or developmentally that I can acquire from this experience in exchange for the strategic benefit that I am offering? So I think you have to look at those opportunities much more as a quid pro quo about how can you drive value and why do you want to drive value? And then in return, either developmentally or as you think about your longer term gain from a board journey perspective, how can that advisory board drive value for you?
Any other thoughts on any of the our topics before we go to our questions?
I'll just double down on what Megan said. Like, I do every board because it's work I want to do, full stop. And the compensation is around the edges. Like, I would never take a board seat for compensation. I would never take a board seat when I felt I didn't know why I would add value. I would never take a board seat. The only thing, you know, when you're looking for a board, you want the board so much, right? And it feels like the worst thing that can happen is they'll say no. Actually, the worst thing that can happen is they say yes when it's not a good board for you, because that's a very difficult place to hold. And there's no amount of money or prestige or resume value that's worth it. So to me, advisory boards are just another flavor. They have differences. They could be wonderful, they could be terrible. And it gets back to, why is it worth? Everybody who's looking at board service has accomplished a lot. Their time is valuable, their expertise is valuable, and they have choices about how to spend that time and use that expertise that are grounded in what they want to be in the world. And advisory board, public board, private board, I would always go back to that. Why do I want to do this? What am I hoping to accomplish? And that will get you through the toughest times and make the enjoyable times that much more enjoyable if you know why you're there. And
Yep.
And status, you know, public, private, or advisory corporate board, those are all just sort of things around the edges.
Yep. And, you know, Lori, I want to double back on a thought related to, you know, compensation and why we're serving and the fiduciary duty. How should we think about indemnification and D&O insurance, you know, private company versus public company, or is it all the same?
Well, some may try to have I guess, a more constrained sense of the necessity of these things on a private board. I would say personally, as a board member, I would push to maximize that for the benefit of all the board members and for the protection of the company. So I would say that sort of the requirements, whether it's public or private or even advisory, I would say that you want to have the strongest, well, you want to meet certain minimums on the D&O, but getting the strongest D&O policies in place you can, and indemnifications to cover the board members. But at the same time, board members need to understand that there are things that you can do to nullify all of those protections. So be cognizant of what that is in the private context, in the public context, and make sure that you're living up to your fiduciary duty. It all starts there.
Great. So whether you are serving on a public company or a private company, D&O insurance is still important as a private company board member. Indemnification is certainly a serious consideration when you are looking at private companies as well as public companies. So let's get to our audience. Did you have a comment, Mary?
Yeah, just that I agree with what Lori said, but I do think the risk of getting sued and the cost. So if you separate why you need D&O into, you know, there's a judgment against you versus there's a lawsuit, and lawsuits are really expensive to defend. Public companies have a higher risk of lawsuits, and just the data shows, and those lawsuits gets really expensive really fast. So I do think a lower level of D&O can be appropriate for a private company because that risk is just lower. Again, it gets a little bit back to if I had a family-owned business with 350 different relatives, I'd start saying, well, litigation risk is getting high again, because that's a mess. If I have two venture investors, both of whom are on the board, I could get my head around like the chance they're going to sue the board for failing to govern the company. It's not impossible, but it's a lot more improbable.
Yep. Great, good. Those are all good thoughts and comments. So let's see if we have any questions in our queue from our audience.
Hello, lovely conversation, ladies. We do have quite a few questions, so we'll try to get at least a couple in the next few minutes. So first up, discussions at the board level seem heavily focused on financials. How did you get familiar and comfortable with the finance lingo, particularly coming from a law background? Teresa?
Thank you for that. That's a very good question. Certainly, understanding financial statements is an important part of board service, whether you are serving on a public company board or a private company board. I certainly have my thoughts. One thing that I think is helpful to do is to take some time. There are continuing legal education courses that focus on understanding financial statements, but I'm going to throw this out to our panelists as well. I have a finance background, so that was easy for me to achieve and get comfortable with. But some of our other panelists, what has been your experience? How about you, Megan?
I think financial acumen and thoughtful financial acumen is table stakes for a board member, and they will they will expect you to be able to engage in thoughtful conversation about it and be able to show up not only when you interview, but as a board member, as someone who understands at the core how the company makes money, how it spends its money, and how it thoughtfully manages its capital investments. I also don't want to overstate that there is some kind of expectation that every board member is essentially approaching their work like a CFO. If the board has been thoughtfully recruited and built, you are there to offer strategic insights on a set of skill sets, superpowers, experiences that you have and bring to the table. And that's not always going to be an FP&A background or a background as a former CFO. So I also wouldn't overemphasize it and overstate it, that you always have to have a surgical expert piece of advice about the company's financials, because the reality is they're going to have a CFO and they're going to have a set of finance and accounting and control teams. So one, I would make sure that you have the baseline to sophisticated financial acumen that will be expected of a board member. But I also would just make sure that you're also very thoughtful and taking inventory of why you were invited to sit in that room, and make sure that you're also emphasizing those perspectives as opposed to just always bringing a pure financial look to the table.
Hopefully that was answered the question for our audience there. Do we have another question, Yesenia?
We do. The audience wants to know if any of you have ever been in a position of quitting board service. What circumstances led to that, and what were your takeaways to avoid it? Or what would be your line in the sand to make that decision to leave a current position?
Okay, Mary, I will toss that question to you. And then Loria, I'd like your thoughts there as well.
I have. I left one for a perfectly benign reason. When I was at Green Dot, I was on the public company board. The CEO asked me to become the CEO of the bank, and then I wouldn't have been independent. So there are some times that leaving a board is, a non-event. There was one private company board that I did leave, and I would say it went really well. I think the mistake is when you don't agree with where the board's going to get caught in the conflict. What I try to do is step back and make sure, am I being clear about the strategic choice I think the company is making? And do others agree with me? And when I realized that they did understand, I wasn't going to leave until I thought they understood me. But once they understood me and I realized that they were choosing essentially a higher risk path than I felt was appropriate, that I couldn't add value because I'm more around, call it the sophisticated, operationally complicated, lower risk path. Like that's where I can help them. We're gonna just swing for the fences and hope for the best. That's not me. And I couldn't do anything for the company to help them be successful. And I realized what they wanted while I was happy to have joined the board when I did, the alignment we talked about as being so important had ceased to exist because this divergence on what the right next step was. And so I left. I think one thing that I really appreciated, they gave me an equity grant actually after I left. So that told me they still valued me and valued how I left. And I felt really good about that. And I continue to have relationships with people in those companies. So it doesn't have to be quitting or conflict ridden, but it was really important for me to leave because I was no longer able to be an effective board member in that company.
Mhm.
And Gloria, do you have a 30-second follow-up?
Really quickly, I just wanted to double down on what Mary said about disagreement. You will disagree with decisions made on a board. That, in my humble opinion, should not be a reason to leave unless there is there's an erosion of your personal core values. And it takes a lot of thought to get there. I've not experienced this. I've coached people who have. I would just say you have to really go deep and understand your reason for leaving and make sure that it's something that's deeply rooted, something that you could not anticipate in the past, and have lots of discussions around people before you take that step.
Great. Well, all great questions, very good panel responses, sharing experiences. We really appreciate everyone joining us at this event of Direct Women. And remember, Direct Women's mission is to increase the representation of women lawyers on corporate boards. So we really want to thank everyone for attending this program on private company board service. I hope it has been helpful, and thank you for joining us.
Thank you, everyone.
Thank you.